All right, so welcome again, everyone. And today we'll be discussing something very important. You know, um, this strategy class was actually all right. This strategy class is actually, you know, decided to have the strategy class to actually help traders, to build more confidence in their trading. All right, because once you come into a space and you are less um knowledgeable about that space, it comes with fear, all right? So once you begin to understand and begin to learn about that particular industry, begin to gather more confidence, all right? Begin to gather more confidence. And that's one of the major purpose of today's class, all right? So we'll be speaking about a strategy that is very easy to understand and you can use, you can replicate, and you can systemize, all right, add it to your trading so that it could actually increase your profitability when it comes to trading in the market, all right, when it comes to trading in the market. And it's a trend trading strategy, all right. It's a trend trading strategy. I know you must have heard about it before. And if you haven't heard about it, this is actually going to be um is actually an opportunity for you to learn about it and add it to the strategies you use. Or if you don't have, I mean, this is something that you can always use, and um add it to your strategy classes. So I can see some people requesting for recording. Don't worry, the class has been recorded already, so you don't need to request for any recording, so it will be sent to you. All right, so let's proceed. All right, so why trend trading? Why trend trading? About 60 to 70% of the time, we have markets that trend. All right. So the trend is actually your friend. And I mean, why wouldn't you want to trade with the trend? Something that pushes in a particular direction for a certain period of time. What do you expect? You want to follow through. Why would you want to trade against it? Or the trend is actually your friend. And that is what we'll be looking at today. All right. How to identify the trends and how to trade with the trend. All right, how to identify the trend and how to trade with the trend. And like I said, it's a very easy strategy, and you can gradually take it one step at a time. You don't need to rush. You can take it one step at a time. All right. So basically, how do you identify the trend? How does the strategy work? All right. So there are two basic ways. All right. There are two basic ways I'm going to be explaining in this class today. And one of the ways is price action. All right. Price action. The market never moves in one direction. All right. If you notice, the market never moves in one direction. All right. When it comes to the global market, it's filled with demand and supply. So every single place in the market, there's actually demand and supply. So what propels the market to push up is when there is more demand than supply in the market. All right. I'll take that again. Is when there is more demand than supply. And when there's more supply than demand, you see the market pushing to the downside. All right. So once you're able to identify, areas on the chart, or there's a way the market would identify or tell you that okay, there's actually more demand in this market than supply, and also the inverse. All right. So and for price action, we have higher highs and higher lows for uptrends and low highs and lower lows for downtrends. All right. And there's also an indicator that you can use to identify the trend. All right. So let's go straight to, all right. So let's go straight into the chart. I'm going to take this away and I'm going to go to the chart so we can, because this is actually more of a practical class. All right. This is more of a practical class. So, first of all, not all instruments actually trend, right? So for you to actually trade with this strategy, you must be able to identify instrument that trends. And I'm going to be giving us a few instruments that I know and I've seen that trend about 60 to 70% of the time. All right, this instrument trend about 60 to 70% of the time. And if you have something that does something, or that repeats, or a particular instrument that trends about 70% of the time, trust me, you can make money about 70% of the time also, as long as you're trading with that particular direction. All right, as long as you're trading with that particular direction. So first of all, the first um The first strategy I'm going to be teaching us is the price action. All right, is the price action. Now, like I said, in an uptrend, you should be able to, in fact, for you to identify an uptrend in the market, the market, or you see new highs being created in the market. I'm going to identify that. All right, I'm going to identify that for us right away. So you can see this is actually US 100. All right, you know that most indices they trend a lot, like a whole lot to the upside. If you check it on the higher time frame, they move the upside most of the time. But how do you take advantage of them is the tricky part. All right, that is where strategy comes in. How you take advantage of them. All right. So first of all, identifying a trend, the first thing you need to do is to identify the low and the high. All right, so identify the low of the high and the high. Now, now, if we come to the chart and we see something like this, okay, let me just adjust this a little bit. Now, perfect. Now, if we come to the chart, let's say we just open our laptops, open your phone, and the first thing you see is this particular chart. Now, how do you take advantage of it? The first thing you need to do is identify what trend is the market on. All right. What trend is the market on? Is it an uptrend and is it a downtrend? And how you identify the uptrend is, like I said, create the lowest point you can see and also the highest point. And the lowest point I can see around those charts is this level here. All right. This is the lowest point. All right. This is the lowest, and this is actually a high. All right, this is a low, this is a high. Now, when the market, like I said, the market doesn't just move in a straight line. It always creates levels to retrace. It always creates retracement in the market. The retracement it happens as a result of the buyers or the bullish like the people that are buying or the bulls in the market. Bulls are actually called buyers. All right, it actually happens as a result of the buyers taking their profit. All right. Retracement happens as a result of buyers taking their profit. And when you identify a low and a high, all right, that retracement is actually caused by profit taking by the buyers. And the market pushes a little bit to create, you see more like a little sales coming in. So for the market creating a retracement in a bullish trend is actually called a higher low. The reason why it's called a higher low is because that retracement level, all right, that retracement level, the low of that retracement is higher than where the market started from, which is this previous low. So this is a low, this is a high, this is a higher low. Then once the market pushes up again, is a higher high. All right, this is a higher high. After I've identified this low, this high, the retracement, which is the higher low, and the higher high. Now, this is where you know that the market is in an uptrend, all right, and you start looking for how to take advantage. I'm going to teach you two ways to take advantage of a trend, all right. All right, sorry about that. All right, sorry about that. All right, so we'll continue. So, how you take advantage of these is that I'm going to teach us two ways, all right. So the first thing you can do is you put a a buy stop at above that previous high or the new high that was created. Because price is in an uptrend, new highs are going to be created. And for you to take advantage of it, once you've identified the trend in the market, you've identified the low, the high, the retracement level, which is the higher low for an uptrend, and the higher high. After the higher high has been created, what you need to do, the only thing you need to do is put a pending order above the new high and your stop loss somewhere below, right? Because you know that market is going to create a new high to take advantage. All right. So when the market pushes, your buy stop is being activated, and what do you expect the market to keep pushing up to create a new high? And you do that repeatedly. After you've done that, you wait for the next retracement. After the next retracement comes in, what do? You put your buy stop above the high. At that point, you're actually trying to take advantage of the the uptrend or the new highs that should be created, right? You can see it's not very tactical. It's not very difficult. It's something that you can do repeatedly over and over and over again. All right. So after this, you can see this particular retracement here. You can see this particular retracement. In fact, once the retracement is being formed, all you need to do is just put your buy stop above. All right. To put your buy stop above, the same thing over and over and over again. All right. Over and over and over again. Now let's look for another. Let me show you another instrument. All right. Let me show you another instrument. All right, we all know that the yen instrument, all the JPY pairs has actually been, in an uptrend for a period of time. All right, for a period of time. So this is actually GBP JPY. All right, this is actually GBP JPY. Now the same way, the same idea, the same tactic. Now what you do when you come to the chart? All right, identify what is the trend. All right. Now the manual way, like I thought, is to check the lowest point and to see if new highs have been created. Now this is a low, this is a high. This is a low, this is a high. All right. Now once I've seen the low, the high, you see this retracement, the market creating a higher low and now a higher high. You can see this high has been taken out. All right. A low or high, the retracement to create a what higher low, and the market breaking above this previous high to create a higher high. Now, once you've seen this market create a higher high, what you need to do is to wait for the retracement. Once the retracement has started, how you identify the retracement? You can use about 2 to 3 red candles. All right, for a bullish trend, 2 to 3 red candles. All right, once you've seen about 2 to 3 red candles forming, then you can put a pending order, a buy stop above that particular high. All right. In this case, in this scenario, is now after this push up, you can see this candle one, see this one. Now, once this red candle forms, what I want to do is to put my pending order above this level here. All right, above this level here, and my stop loss somewhere below the lows. Yeah, somewhere below the lows because you don't want the market to activate you and take you out. So you want to put your stop loss at a level that the market would invalidate that setup. That is the idea behind putting your stop loss. All right. So you put your buy stop here once the market activates, although you were in a little drawdown, but what happened ended in profit. Now after that has created, after that has you've taken your profit, what you need to do again is actually to repeat. All right. You look for the next retracement level to come. At this point, I will take this as the next retracement level here. I'll take this all of this as the next retracement. So my pending order should be somewhere above this highs here. Right? Above this highs. And what happened when the market got there activated? What happened? Kept pushing up. Now the same thing. Where's the next retracement? This one here. All right. What you need to do, put your pending order here. All right. After once you've seen this forming, after this candle has formed, what's the next thing? Put your pending order above, and what happened? The market activated and kept pushing up, right? And kept pushing up. So the next retracement is coming in. This one is actually a very deep retracement, but I mean, you wouldn't be trying to just go into a buy. You wouldn't be in any of this trade because what happened? Your pending order is where above this level here, right? Your pending order is above. Now, this strategy is actually quite easy because it puts you in a comfortable position and you can actually take about 10 to 15 pips, right? You get 10 to 15 pips easy. And if you're using a good lot size, you don't need to be trying to maybe look at the market over and over again, trying to maybe you are very busy or you don't have time. You can actually put this pending order. Once you've identified, put your pending order, put your take profit, put your stop loss, and leave it. You can go and do other things. You don't need to keep trying to, oh, I mean, this trade, what's happening? You want to keep checking it over. Now you have those parameters set in place already. Now, once the market get there, it activate those order, 15 pips, at least 10 to 15 pips, it's gonna get there. All right. Your take profit is gonna be hit at least 10 to 15 pips. So if you are know you maybe you want to ride the whole thing, it's actually quite risky, but it's actually profitable too. Very, very profitable. All right. So the same thing on repeat happens over and over again. You can see after it broke above, what happened? It actually pushed up. Where's the next retracement level? This is the next retracement level I would actually take into consideration. One, two, after this candle has formed, my buy stop is here. And what happened after price activated? What happened? Price market kept pushing up. The same thing over here, over and over again. And now you can see what's happening currently in this market. This is the most recent chart for GBP JPY. Now, if this is more like a bonus trade even, where would you want to put your buy stop above this high, so that once market pushes up, activates you, and you're going to make money. So your stop loss will be somewhere at this lows, and you'll be targeting about 10 to 20 pips. All right, definitely, it's a strategy that has a high chance of playing out, has a 70% win rate. All right, has a 70% win rate. Now let's look at one more instrument. All right, one more instrument. So this is actually going to show us the Canadian dollar, a Canadian dollar instrument, GDP card. All right, GDP card. So GDP card actually about, 70% of the time also GDP card trends a lot. So I've shown us an uptrend. Now I want to show us a downtrend. All right. I want to show us a downtrend. Now this is GBP Canadian dollar. Now you can obviously see that this market has been pushing down. Now if it comes to this chart, what you get to notice is that this market has been pushing down over a long period of time. And if you have to use the same strategy manually, all right, how do you identify it? This is a high, this is a low, this is what a all right. So okay, this is actually a downtrend. For a downtrend, we use lower highs and lower lows. Now this is a high, this is a low. Now this is a lower high. The reason why this is a lower high is because this high is lower than where the market started from, or where the trend started from. All right, this high is lower than this. All right. Now, when the market pushes down again, all right, you expect it to create what? A lower low. Now the market creates a lower low. All right. I can see someone raising his hand. You don't have to bother. There will be time for question and answer after the class. All right. So there will be time for question and answer. So you can just jot down your questions, or put it down in the comment section and refer back to it so your questions can be answered. Now you can see this is a lower low. Now you can see this has actually, this new low that's created has actually, you know um verified this downtrend, has verified the downtrend. Now, what do you do after you've seen a retracement? Easy, the same thing. You put your a sell stop below. All right, put a sell stop, and obviously this is about maybe 40 to 50 pips move to the downside. Um that's why I said target between 10 to 20 pips. You can do this repeatedly over and over again. All right, 10 to 15 pips. And what do? You wait for the next retracement level. All right, you can see this retracement was actually far, but you wouldn't, if you're selling somewhere around here, you won't be in any of those. In fact, you will be caught up in all of those trades. So for you not to be caught up in a large retracement, that is why I suggested a sell stop below this low. So you put your sell stop below this new low that is created. Although it took a very long period of time, but what happened? The market still would have activated it over here, and what happened? You have still made your money. You'd have seen. So all the time you put this pending order here, you might have been trading another instrument. So you don't have to stick to only one particular instrument. You can take about three or four. Use the same strategy. So if one would take a longer period of time, maybe two others would have given you your profit for the day, right? So the same thing repeatedly over and over and over again. Now this is actually a bonus, all right? That is actually a bonus. Now there are situations whereby because the market never just goes in a downtrend forever or in an uptrend forever. How do you know when the trend is about to change? How do you know when the trend is about to change? Now, the first thing you get to know is that now after the market, for a downtrend, market creates lower highs and lower lows, lower highs and lower lows. Now, um when you see the last lower low, now for me to say this trend has changed, the last lower high price will have to break above the last lower high in this market, which is this one over here, which is this one over here. If you can see my cursor, this one over here. This is the last lower high, and this is the new lower low. Now you can see what happened. Price pushed all the way and broke above this lower high, retraced, now created a what? Higher low, pushed up and created what? A higher high. So now this trend is no longer to the downside, but now the trend is changing to the upside. All right? The trend is now changing towards the upside. And once you've identified, remember what I said for an uptrend, you identify the low, the high, the higher low, the higher high. Once you identify that progression, just low, high, higher low, and higher high. Definitely, what you need to do is easy put your pending order above those highs. Put your pending orders above those highs. All right. Put your pending order above those highs. All right. Put your pending order above those highs. And what do you see? The market actually pushed all the way to the upside. Market pushed all the way to the upside. The same thing after you expect the retracement to come in. Once you've seen the retracement come in, what do? Put your pending order again. And once market activated it, what happened? Pushed all the way to the upside. So one one important advantage of this is that you're not being caught up in a change in trend because you're using a pending order. All right, that is one strategy. You're not being caught in the change in trend. Probably you, for example, let's say you want to wait for maybe after this retracement comes in, you want to wait or you want to buy from the lows. You don't want the last high to be taken out. Let's say you buy from somewhere here and the market keeps going down. Or in a situation like this, this is actually a good example. This is a good example. Let's say you've taken this new high has been created and this retracement and you want to buy from here. For example, let's say you buy from here and you're expecting a new high to be created. Yeah, you would have been in profit, but what happened? The market actually broke last um this last higher low and you'll be caught in a change in trend, which is actually not healthy. So the best way to trade it is actually to wait for a breakout above, for the market to break the previous high, so that you'll be more confident that a new high will be about to be created. All right, a new high would what be created. All right, so that is one important way to actually enjoy the strategy. Now, the second way to identify the trend, the second way to identify the trend is the use of moving average. Moving average is actually a trend trading indicator. All right, moving average is actually a trend trading indicator. Now, let's go back to US 100. Now, let me show you what I mean by that. Right, so this is US 100 chart. Let me bring out my indicator or my moving average. Right? So the two moving average I'll be advising or I'll be letting us know one important one is moving average 21. All right, moving average 21, EMA 21. All right, I'll repeat that, EMA 21, and we can also use EMA 50. So these are 21 and 50. All right, so the EMA is just the sole purpose is to help you identify the trend. That is the sole purpose, to help you identify the trend. So you don't need to start looking for higher highs and higher lows manually. You can just come to your chart and use the moving average. Once you see the moving average, this two moving average pointing to the upside, or if you see price trading above the moving average, then you can confidently say that the trend is to the upside. And you will use the same strategy for entry and exit. All right. So use the same strategy for entry and exit. Now you can see peradventure, let's say we can see this price trading above this two moving average. All right. The price trading above this two moving average. Now once you see that, the same way, all you need to do is to still identify know where the new high is, wait for the retracement, and you put your pending order above the previous high. All right. Now let's just take a look carefully. Now you can see the moving average pointing to the upside. Now all you need to do is to put your pending order above the retracement level. You can see after this push to the upside, this is the retracement level here. All you need to do is to put your pending order above. So you're not being caught up in probably some sales spike to the downside and So you're trading safely because you know that once that high is taken out, there'll be volume. All right, there'll be volume to actually push the market to the upside, and you'll be able to get some good profit. All right, you'll be able to get some good profit. Now the same way over here, after this high has been taken out and you've taken your profit, remember you don't need to stay in too long. All right, you don't need to stay in too long. You can use a good lot size. All right, you can use a good lot size, start about 10 to 20 pips, and you are out. And you are out. All right. So after you've taken your profit, wait for the next retracement to come in. All right. Once you see that retracement coming in, you put your pending order above that retracement level, the high of that retracement level. All right, the high of that retracement level. And once the high has been taken out, the volume or the momentum the market will use to take out that high would actually trigger your entry and give you about 10 to 20 pips at least. At least. All right. So let's check another instrument again with this moving average, the same way GBP JPY that we checked before. All right. All right. You can see GBP JPY. All right. So for a very long period of time, GBP JPY has been pushing to the upside. You can see how the moving average has been pointing up and up and up and up. All right. Up and up. Now I'll show us something tricky about this moving average. All right. I'll show us something tricky. Why the entry and exit strategy I'm proposing or I'm teaching us is actually put you in a comfortable position. All right. Now, before I go there, the same way you can see obviously that the price has been trading above the moving average. Has been trading what? Above the moving average. All right. So the same way for entry and exit strategy. Once you see price trading above, you look for the most recent retracement. Peradventure, we come to the market and we see price somewhere around here. All right, we see price somewhere around here, this particular candle over here. What I want to do is to be patient for a retracement to come in. Once I see that retracement coming in, what I need to do is to put my pending order above above the highs. All right, above the highs. Now obviously when the market activates it, all right, if we put our pending order, so you don't need to put it too close to the highs. All right, you don't need to put it too close, just give it a little room, give it a little room. All right. So once price activates, you know that okay, it is clear from the previous high that has been broken. All right. It's clear from the previous high that has been broken. All right. So once price gets there, what happens? Definitely that momentum will keep pushing it to the upside. Now, the reason why I don't recommend using moving average for your entry and exit is because it's actually quite risky. In a system whereby you can see the price trading below the moving average. If you blindly take a sell, if you blindly take a sell, you would actually be caught up what in the reversal. Like this is actually a fake out of the whole trend. Like the trend was kind of it was kind of depicting a change, but what happened? It failed and it continued pushing to the upside and continued pushing towards the upside. So you need to be very careful and know that you're using a pending order. Now in a situation like this, whereby we see price trading below the moving average. Now in a situation like this, we won't just blindly take a sell. We would wait for the retracement level to come in first, and what do? We put our pending order below so that if this trend is actually real, that the market is about to change, definitely we'll see the momentum coming in, and these lows will definitely be taken out because in a downtrend, what do you expect? New lows to be created. For new lows to be created, all right? And you can see price broke above into this place. I mean, price definitely would never activate our sell stop. I would delete it, and the trend continues to the upside, and we can keep using that strategy, the entry and exit strategy, to take our profits. And also remember, always make sure that you're putting your stop loss just somewhere back within the retracement level so that in case you're being activated and the market pushes down, you know that okay, you just take out or the market takes you out in a little loss or something. All right. And you can also have money in your account to actually trade again. All right, to trade again. All right. So basically, this strategy is actually very easy to understand. And like I said, if you don't want to use the basic way of identifying the uptrend and downtrend, easy, you can just use the moving average to point it out for you where the market is actually headed to, where the market is actually headed to. All right. So this is actually very, very important. I want to actually show us something. So we're actually coming on end to the strategy class, all right? So like I said, it's actually recorded and you can watch it again. It will be set out to you by your account managers so that you can have time to watch it again, all right? So but before we actually end, all right? So before we actually end, um I'm going to be dropping a link on the comment section, all right? It's a YouTube link, all right? It's actually a YouTube link. So you can actually get so much value on strategies, on weekly market reviews, on this strategy class. All right, you will see it on this strategy. You will see every strategy, weekly analysis. You will get them on this YouTube channel. Now, I'm dropping the link now. All right, so that we can actually follow. We can follow, subscribe, and also that you can be getting information on anything forex, on anything trading from optimum optimal value. All right. So I've dropped the link now on the YouTube page. You can actually click on it and follow through. All right. Subscribe, like I said, like. You can also share it to anyone you feel would need this particular value, and put comments once you enjoy the video or you enjoy the value that you receive from it. All right. So lastly, what I'll be doing is that I understand that this strategy class may be quite you may need more guidance and follow up. So I've actually created a 1 month guidance class for anyone. All right, just hold on. All right, let me go back to our chat. All right, so we'll be having a 1 month trend trading guidance with me. All right, a 1 month trading. All right, so I'm having a 30 days. Sorry about that. I'm having a 30 days trend trading guidance class. All right, so this guidance class would detail the different instruments that are actually in a trend and how to easily identify them, trading opportunities and setups. All right, for this trend trading strategy class. All right, and the minimum. All right, because the reason why the minimum for to actually have access to this class is 500K and above. Now, it is very, very important to have this funds in your account because when it comes to trading, trust me, I've been in the market for a very long period of time. And if you have small little funds in your account, it is very difficult to actually be successful. All right. So it's actually 1 out of 100 to actually make good money from the market. Now, I'm actually putting this particular amount for you to fund in your trading account because I've seen it happen. So let me give us a brief example. I had a particular client. He has been struggling funding 70K, 100K in his trading account for about 2 or 3 years. And I taught him this same strategy. And trust me, believe it or not, this man was able to take 500K to 5 million in less than a month. Although he was using big huge lot size, and the strategy or the instrument he traded it on was actually in a buy for a long period of time. So he kept making good money. He kept increasing his lot size because as you make money, as you keep making money, you can actually use more lot size because you have more volume. All right. So to have access to this class, you should have about 500K and above in your trading account to have access to this 30 days guidance. It's going to be a closed WhatsApp group. All right. 500K and above. If you don't have up to that, you can actually speak to your account manager. I mean, take it from 300K, but nothing less than that, because I understand that you would need this money or this funds in your account would help you for with more margin. You can easily diversify into different instruments. If you have 100K, you cannot trade indices. It's very risky. You can't trade commodities. All right. You can trade indices. You can so for ease of diversification, you need to have good funds in your account so that you can trade indices, you can trade commodities, and you can also trade currency pairs. All right. So from 500K and above, once you can fund the account, send the receipt to your account manager. Your account manager will send it to me so that I can give you access to this closed WhatsApp room. All right. To this closed group. All right. So and if you can fund it before today, and trust me, you're gonna get 100% bonus from your account manager. You're gonna get 100% bonus, making your margin about 1 million in your trading account. All right, making your margin 1 million in your trading account. You're gonna get a bonus. All right, a bonus of 100%. All right, so I wanted to take time, all right, and act immediately, all right, act immediately because we are beginning. This class is going to start in the month of June, which is next week. All right, it's going to start in the month of June. All right, so what I want us to do now is in the next few minutes. All right, so in the next few minutes, okay, because our time is almost up. Yes. So for questions, what we're going to do is because we have less than 1 minute, so we can actually rejoin again so that we can have about 20 minutes or 10 to 15 minute questions so that we can answer all the questions and wrap up everything for today. All right. So if you have any question, please I want you to just copy it and so we can rejoin this particular link again so that we can have answers to your questions. All right.